Welcome back on The Pursuit of Wealth, everybody. It's Rod with Pow Group, your home for MJ Stocks, crypto assets, news, and interviews. Today is Thursday, July 31st. Hope you're doing well. Not so great news pertaining to AYR. Unfortunately, we got an absolute bombshell of an update here today. Restructuring, they're going to be selling assets. We're going to be discussing what does this mean if we're an AYR shareholder. Full disclosure, I don't own any of the company. I've been telling people, I'm not here to say I told you so. I want to make sure that people are learning their lesson from this, because the stock has been absolutely decimated. It hit 2.5 cents. This was once a darling in the space. And again, I've been saying for probably a year now that we needed to be very, very cautious on AYR. They had a lot of debt. They had a bunch of management shakeup, board members coming and going. And, when Florida Amendment 3 didn't pass, that was essentially the nail in the coffin. High debt load, there's price compression, a lot of saturation in the market as well, and competition, getting out of states that weren't profitable. It's just, if you can't win at home, that's a big major red flag. And like I said, there was tons of those red flags that I just mentioned. And I hope my heart goes out, thoughts go out to those that are affected by this. Hopefully, you didn't invest too much money into this company, but it's not good. We'll break this down in layman's terms as well. Before we do, make sure to smash the like, help support me in the channel. If you're new, you can subscribe, take the bell, all that good stuff, and you'll be notified on any future content. And as always, not financial advice. This is for entertainment purposes only. You can follow us over on X as well, formerly Twitter. Handle for that is @GroupPow. I'm going to be using that as my platform of choice going forward. So just from the November vote for Florida and around the election time, just from November to this month, we're down over 99% on AYRWF, on AYR stock. So I said that for many, many months now, it's got to be close to a year that we need to be extremely careful with AYR. And I talk to a lot of people. I talk to a lot of people all the time about all different kinds of cannabis companies and companies in general. And this one had all the red flags. And, I had people telling me that they were heavily invested into AYR. And I asked them, like, what is it that attracted you most about AYR? And no one can really say anything. They were just listening to what other people said on social media or on a YouTube video. They couldn't tell me one product, couldn't tell me one brand. And that's a huge red flag. Like, you have to be more picky with your investments, right? Just imagine Warren Buffett not trying McDonald's products before investing. It just would never happen, right? If you're going to invest in a company long term, you need to find companies that, they're leaders, they don't have a high debt load, they've got, profitability, they've got a path. If they're not yet profitable, they got a pathway to profitability. It wasn't a good look at all here for AYR. And I hope people now, at the very least, you learned a lesson and you can kind of spot this stuff in the future so that you avoid this death spiral and downfall. So we'll go through, it's a pretty lengthy article, and it goes through a lot of technical relevant information here pertaining to this new restructuring support agreement, and that's with their senior note holders. So essentially just their lenders. I'll go through, break it down as simple as possible. So basically the company, it's been facing financial difficulties for a while now due to its debt. So they're going to be going through this restructuring agreement with their lenders. And what they're going to do is the lenders, essentially, they're taking over key parts of their business. So the lenders will buy AYR's main assets, like their stores, their operations. They operate in Florida, Ohio, Nevada, New Jersey, Pennsylvania, Virginia. And they're going to be doing this through a sale process. It's called process called Article 9. And this is just a legal sale process where essentially they use the debt owed to them as credit to bid and acquire these assets without having to pay a bunch of upfront money. This will create a new company they discuss called NewCo, and that's going to be owned by the lenders. So essentially it's a controlled handover to the lenders, who will also get shares in the new entity. So temporary funding will be necessary to keep things running. So that's essentially what they're doing here. They're basically just keeping the lights on. The lenders are providing a short-term loan as well, up to $50 million to help AYR pay its bills. And like I said, keep the lights on, keep the stores open, and manage the sale. It also had a high interest rate there of 14% per annum, and will later convert into debt or shares in the new company. So they're going to be looking at the sale. After the sale, what's left of AYR, any remaining assets or operations will be sold off or shut down in an organized way, and it's possibly it's going to be under the oversight of the Canadian courts, because that's where they're based out of British Columbia, and also U.S. states as well. Any court there. What else? Any money? I'm just looking at my notes here as well. Any money from this will go toward paying back debts as well, according and other legal priorities as well. So overall, not a good look. They're going to avoid immediate collapse. Essentially, it reduces their debt, but it transfers its core business to the lenders, who are going to run the company. Who knows? It could be better or worse. But the CEO, and it's the interim CEO, that's been a very popular trend with AYR. Can't seem to get anybody in there permanently, but called it a milestone. I don't know if I'd call it a milestone, but essentially said it's a milestone for restructuring, but it means, like, at the end of the day, this means that the original owners and shareholders of the company, right? If you're a shareholder of AYR, it's not a good look, because you're losing, the company is, the existing owners, the existing shareholders, you're losing control of the company, and in turn losing value. And obviously they'll keep us posted on the process as things progress. But just from a value perspective now, you're trading at 3 cents. Like, this thing was just at, back in November and October, it was at $2.60, and here we are now at 3 pennies. So I would say, I wish I hope it doesn't end up as bad as it could get. But I'm like I said, when I have a gut feeling about something, it's usually right 95% of the time. And when I would look at AYR, I would absolutely cringe and my gut would turn upside down. And here we are. Again, I'm not here to say I told you so. I'm just here to hopefully give you that reassurance that you need to learn from this and avoid it from happening again in the future, right? Learn what the red flags were, how to spot them, and then how to make sure that you keep that in your memory bank for the next time. And make sure you really take your time and do your due diligence, put in your hours. You have to do due diligence into these companies, understand their products, their brands, try their products and services, their brands, live and breathe this stuff. And if you're not doing all of that, well, then you shouldn't be risking a ton of money. And again, I'm not telling you to buy, sell, or hold or anything like that. I'm just, I know a lot of people were down in the dumps today. A lot of people, kind of just, I was even talking to people who I warned them about AYR and they just didn't listen, right? But, it was a negligible amount and they were already down, so they just held it. Others were down substantially. So, like I said, my thoughts go out to anybody that was affected by this. At the end of the day, like I said, we can just learn from this, right? That's the silver lining. And yeah, at this point, I had some people ask me, like, what should I do? Should I sell my shares? That's completely up to you. I can't tell you what to do. Whether or not it rebounds and you get more value than it's currently valued at right now, that remains to be seen. I don't think this story ends well, especially for existing shareholders, unfortunately. But let me know your thoughts and opinions on this in the comment section. If you need to reach out, by all means, reach out. And I can't tell you what to do, but I could tell you what I would do if I were in your shoes. And like I said, we need to make sure that we don't forget this and we remember the red flags and how to spot them in the future. All right, it's Rod with Power Group. Thanks again for joining us on the Pursuit of Wealth. Hope you have a fantastic rest of your day, and we'll see you again on the next video.